General risk disclosure. Trading financial instruments, including forex, futures, equities, commodities, and cryptocurrencies, involves significant risk of loss. Trading is not suitable for all investors, as it may result in the loss of your entire investment. Leverage, volatility, and liquidity risks are inherent in these markets. Before engaging in trading, carefully consider your financial situation, experience level, and risk tolerance. You should only invest money you can afford to lose. Forex and futures disclaimer. Trading in the forex and futures markets is highly speculative and carries a substantial risk of loss. The leverage nature of these instruments amplifies gains and losses, potentially leading to substantial financial exposure. This content complies with CFTC Rule 4.41. CFTC Rule 4.41 disclaimer. Hypothetical or simulated performance results have certain inherent limitations. Unlike an actual performance record, simulated results do not represent actual trading. Also, since the trades have not been executed, the results may have under or overcompensated for the impact, if any, of certain market factors, such as lack of liquidity. Simulated trading programs are also subject to the fact that they are designed with the benefit of hindsight. No representation is being made that any account will or is likely to achieve profits or losses similar to those shown. Equities and commodities disclaimer. Equity and commodity trading involves risks associated with market volatility, company-specific factors, and geopolitical events. While stocks and commodities may have a lower leverage factor compared to forex or futures, they can still result in substantial financial losses. Cryptocurrency disclaimer. Cryptocurrencies are speculative and highly volatile instruments. Trading cryptocurrencies involves additional risks, including regulatory uncertainties, security vulnerabilities, and lack of liquidity. Cryptocurrencies are not regulated by most governments or central banks, and their value may be affected by external factors such as news events and market sentiment. Regulatory references. In the United States, this content adheres to the regulatory standards of the Commodity Futures Trading Commission, National Futures Association, and Securities and Exchange Commission. In the European Union, trading practices comply with the European Securities and Markets Authority standards. Global compliance, content aligns with internationally accepted guidelines, but laws vary by jurisdiction. Consult with a licensed professional in your area. Past performance disclaimer. Past performance is not indicative of future results. Any historical results or performance shown in this content are for informational purposes only and do not guarantee future performance. Educational content disclaimer. The information provided in this video is for educational and informational purposes only. It is not intended as investment advice, nor should it be construed as a recommendation to buy, sell, or hold any financial instrument. Always consult with a licensed financial advisor or regulatory authority in your jurisdiction before engaging in trading activities.
Okay, time to do the work. Monday the 23rd. Alright, so then 15. Let's see what this is. Q4. So this is previous quarter's open price that we keep playing with. I don't like this line first off. But I don't like how we left that equal low. Alright, so in 15. Open, gap down. It's basically a down day, Trump tariff. Same old, same old. It's kind of predictable at this point. I kind of feel like that they can't keep doing the tariff thing. So this might be the last dip unless it's like a Iran war. Tariff dip as Trump throws temper tantrum. Also note, today is inside day. Hold up. And nothing really happened. People just got emotional. if anything actually would have happened, we would have got a close outside of previous day's range. So it was exciting, you know, it was cute. We did clean this up. We didn't touch this, which is an interesting order block. Do we need it? No, we don't. This is an interesting area. We technically don't need it. It's going to be interesting to see us get through here because this is that down closed candle body. This gap is also going to be an easy target. Ideal delivery would be overnight. Small range. What's this? The 24th at 90. We're not going to chop. The ideal delivery would be retrace, expand, maybe order pairing here just because the best possible price for a buy would be here because you would want to buy lower just to target here with an ultimate previous week's high. I still like this long term, but I don't know about that for this week with how we already went. Unless NVIDIA is amazing, then that's easy. But push down here, target up here, and that's enough for the week. Like lower to the order block, draw in the bears. The low is okay for now. We did not create a weak low for Monday. Let's go here. Okay, hold on. This ain't supposed to be everywhere. Open, close, close, open. There's something going on here. That's weird. A little weird gap there. I don't want to see this on every time frame, but it does exist. We close here, open here, close here, open. This is all gappy. Gap. We closed here and open here. So that's a gap. It's just all kind of nonsense right here that we could sit here and fiddle around with. That I'm not gonna sit here and overanalyze. The easiest way would be look for that order block, which is probably somewhere around here. Let's make this a blue box. See if we get a reaction here to get this weekly still needs an up candle. Into retracements after we clean up some inefficiencies. Hold on, just get close. Alright. Kind of the same thing, but at least we cleaned up them equal lows. Those equal lows were atrocious. We pushed down to clean up equal lows. Should be good to go now. But I still think we should push down a little more to trap sellers. Right. Especially with how that cotton was set up. I like the commercials trying to short squeeze the non-commercials. The non-commercials probably tried their best to tariff sell this today, and this is what they got. You know, this low doesn't look that cool though. This low looks better. It's a up candle. Take this. Thinking it's just the initial low. Ideal delivery would be a stop hunt with the institutional force. Boom, 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 boom. I think this is the initial low. Yeah, we need a big juicy sale candle and then just start fading it. I still think this will hold as anchor vibes. Maybe just a baby sweep below this. This is a prominent wig. It's a pretty distinct. Like pushing down into here, it's gonna be a big deal, especially if this closes like a up candle. Yeah, I don't even think we might not get down here. How this is set up, we might react here, then pump. Mm, Gotta be careful at these lows. Lows. New morning blocks could have been created, and Monday could be the low or high of the week. During Trump era, really through all the eras, because Biden had Monday high low of the week too. So can't attribute that to him. Did the framework play out? We ain't really had no framework for that. Stick to my plan. What will I watch for tomorrow? Guys. All right, that's that on that. You have a good day.